Hi everyone, and welcome to this live fed presented by Global Street Trader Academy. Here is François Blay. Hope that you're doing very well. So we just make this video to see how the market will react with the potential releases for the macroeconomic data by the Fed, if they will release for the a hike of rate interest, or if they just leave rate and change, or also if what would be potentially the tone that we probably said about the economy or those stuff. So that's why we record this video, this live. You are welcome. We will probably also take a position on live on this live fed, and it depends on the level that we already set up before, and if the market come and react on that. So I'm very excited about that, and also hope that you will at your turn. You can leave a comment on the chat and ask the question. This video is not recorded just to make just scalping or those stuff. It's just for day traders. So we will just check the market and how the market will react about those different levels that we define. Okay, and also trying to understand with our information which is provided by the Bloomberg information, what will be the perspective about the economy. Okay, so here it is, this financial broadcast. So here also you have to take note about the disclaimer, and we will starting right now. In 5 minutes we will have the probably the figures for the rate interest, if they keep the rate interest at the 2.5% or not. So here is the charts. I put Ishimoku to see like the background trend, and as you see here for the S&P 500, we were yesterday we test the threshold at the 2,850, and it's the same level with the R1, which is the first resistance from the pivot points. And also we'll carefully look for the USD CAD at the $34,250, and as you have noticed here, the distance between $1 $34,250 and the $1 to $32,452. So from the green line here on the bottom until the brown here is representing 200 pips, right? So we just see how the market will react. Depends of what the Fed pronounce as a statement very soon. What would be the potential movement for the dollar index, right? And of course, because the dollar is linked with the gold and also the S&P 500, we'll see what the consequence will from arise in the this effect here, right? So that's why I draw all these major market that I follow daily. If you follow me, I used to trade this pair, which is the USD CAD and also the gold here, and the S&P 500, right? So the major factor that we potentially have been interested today on the financial market will be the dot plot, right? The dot plot, if you don't understand what is dot plot is a kind of simple statistical charts that consist of like some of data point plotted as the dot on the graph with X or on Y axis, and is a kind of these types of the chart are usually used to graphically depict certain data trend of grouping. So dot plot actually is a well known as the method that the U.S. Reserve Federal uses to convey its benchmark with federal funds for the interest rate outlook at certain for the FOMC. So the FOMC, which is like the committee for the monetary policy, and it's just doing that through the meeting that they were doing today, right? And FOMC members place dots on the plot, denoting the projection for the futures interest rates and subsequent year in the longer run. So it's a kind of projection of the rate interest and how they will, they will think about if they will. It's about the frequency, right? The frequency, how much frequency or how many rate interest they intend to lift, right? And we will see also the balance sheet, right? Balance sheet is about the account, the national account for the economy, if they will print money to be accommodative, or if they will just like shrink the balance, right? So it's about the account of the budget of the economy. And also the last thing will be the economic projection. So it's about the GDP or also the inflation, right? So these like major three things that we will check today how the market will react. So apparently we have a first movement here. I just set my Bloomberg station to have the information.
Start talking about the reinvestment policy, which is also a major.
So the market's starting to.
The Fed is behind the curve in analyzing the balance sheet.
We have a first movement for like a bull movement on the
So I'm going to be interested to find out how much
on the S&P 500. Firstly, the market expect that the Fed will be very accommodative. So that's why the US dollar is under pressure, and we can see a bullish movement on gold and bearish movement on USD CAD, and also bullish movement on S&P 500. But it's not just about that. There's also others like the three main topics that I described, like which is the dot plots again, the balance sheet, and also the economic projection.
Let's go now to Michael McKee at the Federal Reserve. Mike?
The doves fly, the pause continues, no change in the Fed's target.
So the Fed leave the rate unchanged as was expecting. So we will probably see after the speech.
Joining the two that were already there. The dot plot consensus sees one rate move in 2020, and there's no change in the long-run neutral forecast of 2.8%. Supporting the change, big downward revisions to the economic outlook. The growth median is now 2.1% for this year. That's down from 2.3% in their December forecast. Growth next year will be just 1.9%. The statement notes that the growth of economic activity has, quote, slowed from its solid rate in the fourth quarter. Recent indicators point to slower growth of household spending and business fixed investment in the first quarter. Although labor market growth remains strong, unemployment is almost done falling. They see it ending the year at 3.7%. That's up from a 3.5% forecast in December. Inflation will be lower, just 1.8% this year and 1.9% next year, a tenth lower than they saw in December. There's also balance sheet news. The Fed will stop shrinking the balance sheet at the end of September. Beginning in May, they will reduce their monthly runoff cap to $15 billion. Mortgage bonds will continue to run off as scheduled, but payments will now be reinvested in treasuries up to a $20 billion cap a month. Those reinvestments will be made across the curve to reflect the outstanding maturity portfolio of treasuries. No word on the eventual composition, though, of the Fed's treasury holdings. In the longer run, the Fed says it may hold some limited sales of mortgage-backed securities to eliminate any residuals. And then, once the runoff ends, bonds, the Fed says it will hold the size of its portfolio constant for a time, letting increases in currency demand shrink any surplus. So if Jay Powell and company wanted to reassure investors the doves are in control here, it looks like they have done that. The question is, did they go even farther than markets anticipated, guys?
Thank you so much.
Okay, so based on the fact that this guy said the Fed will shrink the balance sheet, which were established to the $75 billion, they will diminish that to the $50 billion per month. And also they said to ending all this balance sheet on the next September. Also, they leave the rate unchanged, which is like expected by the market. And then also they said that they have like a kind of little bit slowing projection for the economy, but this movement that we see here is just only the pressure that they put, they're anticipating pressure before on the US dollar, right? So this acceleration here and this dovish movement here is just mechanic based on the fact that the dollar adds a little bit of pressure on it, right? So we will also waiting about the speech of Jay Powell. So that's why you don't need to take a position from right now, because those movement is just based on the fact that the dollar has been pressured based on the statement that this guy just already made, right? But for tomorrow, you see here that the gold, if we break this major resistance here and we close above this red line here, we see clearly that Ishimoku show us that the projection would be on the bull, right? So and it's a kind of ascending triangle. So we do have like the squeeze here, and we're trying to pushing the price higher. So basically all the things that we have to do is just waiting tomorrow, and then when the market will close above 1310, then you can buy the gold until the next highest level here around like 1320, right? But for now we're just waiting about the true of this movement is very true, because it could be fake just because the dollar has been like a bit weak, right? And what it was expected. So
Mike?
Well, I want to ask the panel what they think of the downgrades, especially to inflation, 1.8% for the year. Unemployment's going to be higher and growth is going to be lower, only 1.9% next year. Do you think that is laying the groundwork for perhaps some sort of talk of rate cuts in the future? Or are they just telling us basically the tightening cycle is all but over?
Scott? Well, they have a commitment to, yeah, go ahead. No, go right ahead. They have a commitment.
So the projection for the Fed on the inflation core is remain close to the 2%. So that being said, that the Fed has still confidence to the economy on the futures.
And again, in some other circumstances,
but this is just the
we're not that worried about inflation getting out of
the
control.
figures that they show is not is there is also another things for validating. It would be the speech of Jay Powell. It would be in like around 20 minutes. So apparently the Fed is still like patient. They just said to be patient and observe how the economy will go. So they praised for the steady pace of the economy, and also a little slow for the economy. So they just stay neutral basically, and the market love that, right? As I described through the previous the weekly market analysis, that if the markets, if the Fed said that they will just stay neutral, it could be interpreted as a great news for the markets. But it's just like about first move. It's not like relevant for the next. We see here how the S1, which is the support one, react like very tightening with this movement. We just follow this level. This level is very crucial, which is $32,450, or validate like our understanding for this movement. So we don't doing anything from right now.
Than it is to the economic data. So to Mike's earlier question, these downgrades, this is very minor stuff. This is marking to market. What's a much bigger reaction, accounting for the changes in market reactions, is the Fed's very large swing.
In terms of the dot plots, they expect they will expect 2.4% of the growth, so the growth rate for the GDP. 2.6% in 2020, and also same figures at the 2021. So they're still confident to the economy, while lots of people, or lots of also economists and financial market specialists said that we're probably going very slowly in a recession, begin fall 2019, or begin of the winter of 2020, right? So that's why we need to be to stay with that, and just very careful with these figures. That's why it's important to wait about the speech for Jay Powell, because it could change all of that. This is just based on the figures releases, so the markets are interpreting himself how he wants, but is certainly not the definitive, not the pressuring on the flow on the economy.
So I think that it's swung a little bit too far. I was expecting a much more tempered statement, and it's going to be very interesting to hear this one.
All my level that I've overseas is this level at least here, or this level here, right? But it will be this level will probably react after the speech of Jay Powell. That's why I'm not rushing to buy or sell any products, and trade the live figures of the Fed is very difficult, because it could be tricky very easily when the markets, they just set the figures, and after the chairman said, yes or not, very tricky language, and it depends also on the tones, how they react with that. Because the Fed said again that they're not expecting to increase the rate interest this year. Remember that in the end of 2018, they were expecting, based on the dot plots at that time, to for hiking 3 or 4 times the rate interest. But today they said, we probably leave the rate interest, like, for now we don't like play with that again, because they know about the economy, and they show a projection which is said that they confident to the economy as the 2.6 2.4% to the next year, or those kind of things. So it's very contradictory, you know, data based on what they do and what they show us to to people. Because if you're confident to the economy, why you want to you don't want to play with the rate interest? Because if the economy goes well, you're supposed to, you know, to hike the rate interest. But if you said you not touch that, that being said, you're not very confident to the economy, right? It's just like it doesn't make sense what they said, but it's the official, right? So what they, no matter what they said, it has been like you need to take in count of what they said. So they did not um, they did not expect to rise the rate interest this year. So that's why the dollar plunge, and we see the reaction instantly to the S&P 500 and also on the gold, right? So it's just a mechanic movement. There's no rational here. So that's why we don't need to be on rush and then take any type of position. We're just waiting about the speech of J. Powell for his interpretation of those figures, and it could change mind of people. So I just see the your reaction in the chat. So we have Brandon said hello Brandon. Takeoff Trader said the movement on gold is okay for me. I bought it just before FOMC at 1301. Wow, what a massive movement! Congratulations, guys. That's amazing trade for Takeoff Trader, because he's bought the gold at like here, which is like amazing, right? He's take just $10 like right away, and yeah, for sure. If I've been you, I will keep it, right? Because you got a nice price based on this trend line, and gold was like a ballistic bias. So if we close above this area here, like above 1310, the market will probably pushing the gold higher, right? So that's amazing. Congratulations for this trade. And his target is 1330. So it's like way far here, which is around this zone for based on the Ishimoku show us on the screen here. So that's he is looking to take his first profit. So that's amazing trade. You have to keep it, okay? That's good. Just secure your position, because we are on like while the statement, so we could have like massive movement or erratic unexpected movement, but the based on the fact we close above $1310 here, I'm gonna also probably looking to going on long on gold probably tomorrow or tonight. It depends of the daily close, right? We can take a look quickly here. We see that it's we're coming to test the key June, so we could have like a brief, but definitely if we close above here, we could see an acceleration until the level that you set at the 1330. Okay, so that was well done. Okay. So we just see the markets going to the market could like potentially rally here. I'm just still out of the market, stay out and see how the level will react, and we probably have another position to take. But for gold, as I said, this is like a secure trade. Like people who buying here does like institutional entry, and that was amazing trade from Takeoff Trader. That was really well done. Some of traders could interpret that the fact that the Fed leave the rate interest and change, and also said that we probably have a slightly uh, slow pace of the economy, could be considered as a downgraded for the expectation for the economic growth, right? But the fact is, the major things is about the dot plots, as I described for the firstly, and also the second thing is the economic projection, for where they said they anticipate 2.4% for the GDP in 2020, and they're starting to 2.6% at the 2019 and 2.4% at the 2020, right, or 2020. Okay, and so it's just like uh, a slight retreat for the economy. But it's not just about that. There's also the target for the inflation, and the inflation is supposed to go with the economic pace. And if they have the same target for the inflation, which is around 2%, and also have a kind of a pay attention to the economy, I'm not getting going to be to be bearish on the dollar, because the dollar here we play the both role. It could play the role for the safe asset or the role for the risky asset. But this movement is just about the fact that the market has been already priced bearish or dovish or neutral point of view of the market. So that's why all the thing that we see here is just a mechanic movement. So that's why I'm just staying and see what will be potentially happen to the dollar index. The level here that I draw, the green line, which is $32,450, is look at it, is between the both support based on it, like the pivot point. So S1 here, S2 here, but all the level that you have to look into buy securely is around here, right? Because it's the end of, when you see Shimoku here, the projection, like based on 26 period before, was around the end of the massive movement that we got here. So technically, if you're looking to buy the US dollar index, it will be here, right? Around $32 or $31,910, or below that, why not, right? To have a great price, but it will be here. This level will be just for rebounds or test, and it could not affect your like the progression of the market. There's no impact here. But the gold, the pattern was very easy because we were to the ascending channel, ascending triangle, sorry, and we break that, right? So we just need to have a close above that, and the S&P 500, we need just to that the market will confirm that if they really have confidence about the situation of the S&P 500, they have just to break this all one here, like the first resistance here, which is established to the 2,850, right? If we break it and we do acceleration, we will have to test around the zone for the next resistance here at the 2,870, right? So here is my strategy on the market. So I'm not rushing. I'm not just want to take any position of that. We're not doing scalping here. We're just waiting about the key zone, and then we will take a massive position for like the next next momentum upcoming, right? And the fact that the market, the Reserve Federal signaling that they want to raise interest rate for the rest of the year, and we are just the first meeting this year for the Fed. They sent like a massive signal. So that's why gold rally right now, because the market could potentially worry about the fact that the Fed won't touch the rate interest again. So it's like a bias for me, a bias for the potential like the potential slowing pace of the GDP, right? So based on the macroeconomic data that they show us, it doesn't mean necessarily that it's true, right? It could be manipulative figures. So I'm not accept these figures, but we have to take these figures with our analysis because it's official saying. So that's why it's very difficult. So don't hesitate to put some like your comment and your trade like takeoff trader as he said. If you're on a position, just you can say that to the chat and we can see I can see with you where are your position, and based on the fact that we just wait about the speech of J Powell, if it's necessary to be there, or also close your position to not accept like too much volatility or risk. So a couple minutes, we're supposed to have the speech of J Powell. Usually is talk 30 minutes after the release of the macroeconomic data. So we check that.
If you look at it from the debt side, they're so heavily regulated that their bonds are actually probably more secure.
So the S&P 500 starting to rally. 2,820 still like keep the this bullish trend. Oh, I'm sorry, it's not a bullish trend, it's a impulsive movement, so it's not a bullish trend. I'm sorry. So they're pushing higher as long as we have also this massive bearish movement here. So we are currently test the S1 that we already test that. We probably potentially break it, and this level could be a signal if we have been rejected here for the $32,450. Is there anyone also have taken position of this free asset, or nobody? Instead, take off traders. You can share that if you want to the chat. So J Powell starting the conference. Most of traders of analysts will say tomorrow in the newspaper or financial news that the Fed has been dovish. I'm not agree with that. The Fed has not been dovish. The Fed has just stayed neutral, right? But the fact that it stayed neutral, the market interpret that as dovish because firstly on the 2018, like the end of the fall, November, December 2018, the Fed was very, very optimistic about the economy, where they said they would probably uh, hike the rate interest 3 or 4 times, right? And the fact that they just changed their mind and they passed to the 3 to 4 times no touching the rate interest this year, that's why the markets consider as dovish, right? And it's just interpretation of the market. So that's why the gold has been sold, but the Fed has not been dovish this meeting, because we do see the figures that they release, also the projection, and is not at all a dovish policy, right? It's very neutral policy, and certainly J Powell would be also, we follow these things, right? At that time, the gold like starting rally, so take up traders could be probably millionaire. I don't know, because he bought here. He bought as the like 1300. Like you cannot find better spot like this level. And look at it, it's massive impulsion. We are at 1315. So his first take profit, as I said, it would be around 1330. So around here. So that was very, very well done. And apparently it's already secured, so you will make a lot of money. That's great because it's the goal, right? So USD CAD starting to going to test this level here. As I said, this level was not like an hurdles for the USD CAD, so to breaking out. We see how we will react in this support. If we fell here, it might be a great spot to buy this dip, right? That's what you're looking for. Looking for to buy this dip if we fell if we fell here. So for now, there's no major announce made by J Powell. He's just reading a test, so there's no major announce. And he said that it may be sometimes before Outlook calls for the policy change. So he's just use a margin to tell to people that if it's because they said before that, for based on the fact that the economy has been like a slowly in the pace for the GDP as well, he could also he won't touch anymore the rate interest, but he could, depends of the outlook of the on the pace of the economy, the policy could change. So he said, yes, I will, no, I won't. So it's just like very neutral. So that's why people are just probably interpret that as the. But it's very interesting to see the S&P 500 like rally, because it's just mechanic, because we see the dollar index like drop it, and as we see also the projection for Ishimoku, look at the cloud, right? The cloud is not like a perfectly open; it's a kind of tightening projection for the cloud. So that's why I was not sure if the market could going until this level here. It might be a reject in around this zone here. So it's very interesting to see those technical observations. I can take a look on the daily too, and the daily was, it was certainly like wide open, but in the short terms we might have a retreat around this zone here, right? We are between 2,820 and 2,870. So it's a 50 point around here for the variation. So that was very interesting observation about the S&P 500, right? So we are in 4 hours. It looks to validate a double bottom, like double failing on the S1 here on the blue, on the time frame 4 hours. So at the close at 5 p.m., which is like time frame for North America, we could have also, if we break that this level and close above here, could have an acceleration around this zone here. But my bias of the S&P 500 is a bearish bias. I don't want to buy index, right? You could also, if you do day trading or if you do intraday, to buy index during the day, but I prefer to stay with my my bias, which is bearish bias on the index. I won't see the index be progressive into this zone here. I would be very surprised to see that. Right. So in 15 minutes, we'll stop the video, the recording. At that time, J Powell didn't say not big or major announcement. He's just reading his paper and answer the question for the journalist. He is very neutral. Nothing shocking to the economy. So it's always the same song. So there's no major announcement. We can say the big announcement today was the fact that the Fed said they won't touch anymore the rate interest for now, and it's the first meeting of this year. So they're supposed to have 4 meetings this year. So we progressively cancel this risk, the fact or this probability that the Fed will hike the rate interest 3 to 4 times. And they consider us to have like the willingness and also to feel the effect of slower growth abroad for the economy, right? So this is there's no major change anyway, so I'm happy to just stay out the market and just see what we can get on this level. I follow personally the this level, 2,870 is this level that I follow, and also USD CAD will be potentially $32 450, or why not here? This is the best spot here, like between the S2 and $31 910. And for gold, the strategy was already like be active, so I'm gonna watch tonight or tomorrow if I will take a position here to have a better price. The price for takeoff traders was amazing. We couldn't have like better more. So I'm just showing you the DXY charts. Look to this massive sell-off. And if you remember at the weekly market analysis, we have discussed about that if we, if you pass the this level, which is 96 445, so it's considered as to be a POC, so the point of control weekly, right? So if we break it, we're probably going to test this level, which is present for the moving average in the green, right? And we are on that, right? So I'm expecting a rebound on the markets, and it's still like ascending channel here, right? So that's why the movement on the S&P 500 is not like a sustainable movement, right? Look, this massive sell-off, right? and we see clearly that the POC, right, the POC has been broke. So all those sellers, we were from there, they just pushing the price lower again. But there's like such of we probably close to the as we see here, the target for the bottom of this ascending channel is here, 95.60, right here, this zone. So we could have a rebound in this zone here. Here. So that's why I'm not like, I don't have confidence to this acceleration for the S&P 500, because it's just neutral. It's not just some dovish or bearish. It's just neutral. It's the market, because they expect, and it was expected to have this kind of movement. If the Fed has been neutral or dovish, we could have this bearish movement of the dollar, right? And it's just that. So there's no surprise. But don't forget that we are on the ascending channel, and if we touch the bottom of this ascending channel, which is 95.60, there's a lot of probability for reversal movement that we can get. So that's why I don't want to buy the index, right? Okay. So here my scenario. So just watching that, and the fact that we have a severe decline of the dollar, but we close to the to another major support. Sorry, so we can have rebounds of the dollar at the 95.60, as you've seen of the charts. That's why I certainly watching carefully the this level, which is 2,870, before getting short, right? So I will stop the video right now. J. Powell has done his statement. There's no major announcement made today. He said also it's hard to know potential growth rate with any precision. So it's just neutral, and traders interpret that as dovish based on the fact that the Fed was very, very hawkish at the end of the previous year. That's why. So very careful with that. Take your time to you not have to worry about the strategy. Be very mindful, and watch carefully the macroeconomic data, and also watch your charts and trade what you see, not interpreting what you think. This is like a major mistake that we can doing when we do trading. He said there's no precision for the potential growth rate, because they didn't see any clear data which could potentially confirm that the fact the macroeconomic data has been like great for the economy. But in the same times, as he said that, he said also they are confident for the economy. So it's just it's a very contradictory point of view. So that's why we don't want like buy that. We have just to sell this kind of point of view. So my bias on the index has never changed. I'm still bearish on the index. I'm just watching about my level where the market will react. If we fell here at the 2,870, then I will probably short, right? And USD CAD, I'm just watching here how we react. $32,450 or $31,910. So we not like, we don't know. If I take a look on the, before to finish this video, you see here that the dollar, you see the massive cloud here, and it's little green projection in the green for the Ishimoku here. So that's why this zone is very messed up zone, and we will see how we close after the end of day, and then we'll take probably a decision about like for the next period. Don't forget that we are close to the end of this month. We are the 20th, and the market the month ending at the 31st. So it's just left 11 days that the market will end. Not the market, the month. So there's no big change here. Okay, so I think I will stop the video right now. Thank you for watching this video. It was a pleasure to comment the movement of the market. If you like it, so please leave a comment and like it. You can share that too. If you have a question about the my interpretation of the economy, you can also send me a message to the contact@globalstreettrader.com, or also on the messenger, or also on the Facebook, or also below this video, whatever you want. And it was a pleasure to issue this financial broadcast. There's no major change here. The market are just like react. You see here that the S1 has been like trying to reject this level. So that's why I told you guys that the movement that we saw on the dollar index is just mechanic movement. It's not powerful movement. It's just mechanic. So that's why I was follow this level. If the market coming to test this level and fail, I would certainly buy the USD CAD, but it's don't. So I cannot stay until he will play around here. So yeah, we'll see you around for the next video, and we will discuss about the next strategy that we have to elaborate. Thank you so much for watching this video. Was François for GSTA Canada. See you.